Hello, everyone. Welcome to the Wall Street Blockchain Alliance's Crypto Roundup for Friday, November 14th, 2025. Ron Quaranta here with my dear friend and colleague, the one, the only Mr. David Brill. I do not think we will have, nope, I stand corrected. And our dear colleague, the one, the only Josh Clayman. Good morning, everyone. Good to see you all. Welcome. Before we begin, our usual disclaimers. Obviously, keep in mind, nothing discussed is any sort of business, legal, or accounting advice, and that nothing we're talking about really are recommendations. We're discussing our own personal opinions and not the opinions of our firms. Josh, it is good to have you back. How are you?
Great. How are you guys? It's great to see you. Oh.
It is great to see you as well. No, we hear you now. There's a little bit of a lag. Yeah, we hear you, but there's a little bit of a lag. Mr. David, why don't we kick it off? There's a lot to cover, Josh, and it's good to see you. David, you and I have been exchanging text messages, and I'm not calling it bear territory, but damn if this isn't the ugliest correction market I've seen in a little bit.
Yeah, Ron, like something you were mentioning in the green room, year to date and sort of, boy, it's been a year, a lot of positive. It's ironic because we've had so many positive developments in crypto. The only thing that hasn't been a great development is the price.
Yeah.
For both Bitcoin and Ether. Bitcoin up about 5% for the year now, and Ether down for the year right now. So there is some irony in this, but I think in the long run, all the positive momentum we've had and on the regulatory side will pay off for us sometime in the near future.
Yeah. David, I wanted to dive into that a little bit. And Josh, with the government now opening, we will have to talk about some of the regulatory stuff. And happy birthday, Joshua Ashley Clayman.
Yes. Happy birthday.
Thank you, guys.
How does 25 feel, Josh? I have to ask.
I mean, it feels great every year.
David, let's talk a little bit about the markets, because we've been sharing a lot of messages and we've been getting a lot of correspondence from colleagues and members over the past week or two. You and I talked about it in the virtual green room. Bitcoin barely up 4%, just under 4%. Some of the major cryptos, including ETH, down on the year. David, what do we do in a marketplace where arguably BTC and ETH are looked at as alpha in the institutional side? Now BTC is not beating the S&P, not beating the NASDAQ, not beating the Dow. How do we look at a marketplace like this and rationalize some of the prices going forward?
Well, you take a deep, deep breath. That's what you do for starters. Look, crypto is volatile. We saw a long period of time where it was less volatile. Does it concern me that we're not sort of trading in line with the NASDAQ or sort of correlated with it? Yeah, it does.
No.
It doesn't change my bullish outcome, and beliefs longer term. But I think we're seeing a real distribution phase, and we're seeing a lot of the old holders selling their coins right now. 100,000 is a big round number, and a lot of people who've been holding 7, 8, 9 years are selling. Mm-hmm. I think the other thing, and I heard this spoken about the other day, is retail really hasn't come back. And then you add on to that what happened on October 10th. I forget which day it was. Happy to push that day out of my memory. There were a lot of people who got liquidated, and there are a lot of people who have not come back. So I think, if you look at it in the totality, I think retail has come back on the ETF side, but not necessarily on the pure play crypto side.
Yeah.
So when you look at that all together, it's been a forgettable year so far from the token price side, but not on the regulatory side.
David, I want to dive into that a little bit more, but Josh, go ahead, please.
So I just had a question. I mean, I realize there's a macro, there's a much bigger picture.
He said macro, David, yes.
Yeah, but I'm just wondering also, in some of what I've seen just across the market, not just me, but others with AI and certain energy stocks that maybe were having higher prices, thinking about data centers and, it seems like there's been a pullback with a lot of those as well. And I'm wondering whether this week, some of that could be correlated. Do you think that some of the moves today or from the rest of this week had anything to do with that? Or do you think that there's enough of a separation that it really is just, a different set of motivators.
Yeah, I'll go ahead, David.
No, you go ahead, Ron. I have a thought.
I'll
Go
weigh
ahead
in,
first.
Josh. I think some of this is absolutely correlated. I think there was this sense that there's a bit of froth in the prices. And look, David, you and I and Josh have been talking about the idea that it's different this time when we look at AI, for example, when we look at tech innovation broadly, because these companies have revenue, for example. We get that. David, forward PEs on some of the tech companies were in the 20s to 30s, and you can't connect that to the internet boom because the forward PEs there were 120 on some of these prices. So, Josh, I think you're absolutely right. There was a little bit of let's take a little steam out of the froth of the market. And I think the catalyst for this, and I think you might be alluding to this as well, Josh, is kind of the perspective on interest rates for the balance of the year. David, we went a long time with this perspective of there'll probably be at least one more interest rate cut in December. That's been blown up. Thank you, Chair Powell, for what, I get the reasons why he said what he said. We're at 50-50 on an interest rate. So I think, Josh, I think you're right. I think that's the catalyst that takes a little bit of the euphoria out of the market. David, I'm going to add one more thing, and I need you to tell me if I'm right or wrong. We've been talking about DATCOs for a long time. We could talk about strategy. We could talk about some of the others. Some of these really engage in credit markets and leverage to own some of these. In the absence of a rate cut, David, a lot of DATCOs are forced to reprice and or potentially sell, which puts them in a bad spot. Tell me if you agree.
I agree. I don't know. It's not that the 25 basis points moves the dial on their business model. It's more that the sentiment and how the market reacting to not getting the basis cut is what I think is making them react.
Yeah.
Look, we have to remember too, some of these companies are well run, some of them aren't. And so there was one in particular, and I don't really want to pick on this person, but one of them said they were like selling some of their holdings for capital reallocation. And I was just kind of like, nice corporate speak. The bottom line is, you didn't really set this up as well as you should have, and you didn't leave a margin for error that things aren't just going to always go up to the right. I guess the question is the selling we're seeing a lot of still OG holders?
Yeah.
Are we seeing is it DATCOs? And so who's selling right now? And actually the other thing is interesting is who's buying right now besides the ETFs? And I think the last thing I would say is that many people thought we would see, a really strong fourth quarter for altcoins, and we still haven't had that rally. And
I've given up on the alts, David.
I have not given up on the alts, but I would say that you might start calling me Job next year if it doesn't come sometime. So my crystal ball is still a believer, but boy, this has been painful waiting for the alt rally.
Yeah. Josh, I wanted to ask you as well. Obviously, part of the news that's been affecting markets has been government shutdown. And we'd be remiss in not bringing up, well, the government's not shut down anymore. Politics aside, and David, Josh, we're going to have one of our policy experts as a guest, hopefully next week. I got to make sure I reach back out to him. But Josh, when you look at the government open, that means regulators are back working, probably catching up on thousands of different emails. But I had read a blurb today that said, hey, we're probably looking at dozens of crypto ETFs that will be back on the docket and start potentially pricing next week. I don't think it's that easy, but Josh, what are your thoughts about, the regulators being able to get back to work and its impact on crypto?
I mean, I think, well, my cat has a view.
Sell everything. No.
I'm happy that the government's back open. I hope that it will be a swift return to what folks were focused on before. I can't speak for what other things may be backlogged at agencies right now, but I think we are looking forward to the confirmation hearings for the CFTC chair,
Yep.
and so hopefully getting that moving will help spark things. But yeah, I mean, I don't know exactly what is crypto is the center of our world. I'm not sure that it's the center of every regulator's world.
What? No, Josh, I appreciate that. David, you and the three of us talk to colleagues in DC. We're not lobbyists. at all. I say that over and over again. But David, I know you've had conversations in DC with colleagues as well. And it also makes me think about market structure legislation. I know there's a Senate draft out there I haven't had a chance to review. But David, what are your perspectives on some of this?
Well, I'm hearing that during the shutdown, it really gave the people involved in Congress a chance to really look at clarity and work on some of the issues. And I didn't give it a full read, but if you look in the latest draft, there are brackets in some places. I think there is some progress being made. And it does feel like this is, a priority amongst the Republicans and then a subset of the Democrats. And so my hope is that there is an ability to reach consensus on this. But there are a lot of interesting issues. It's sort of like, well, what will the legislation address, and what are they willing to leave with, and what are they willing to leave with the regulators, and with the SEC? We have the whole Chevron doctrine at play now, and what is the trust level between Congress and the regulatory agencies, and what are they willing to sort of codify and make sure that can't be undone, versus what are they willing to ask the agencies to do as far as writing the rules and the regs.
Yeah. David, Josh, good point. And for everyone in the audience, again, thank you so much for joining us on YouTube, on LinkedIn Live, on X. I believe we're also streaming. If you've got questions for David or Josh or I, please put them in the chat. David, I think that's a good point, and it really comes down to forward expectations on some of this, because I had seen some blurbs of commentary around opposition to market structure legislation, because there really is this perception on the side of the not crypto-friendly politicians that, well, there really are no guardrails. I don't think that's necessarily the case. Is that posturing, David or Josh, in your mind?
I mean, I'll go first, but I know Josh has a view. Look, clearly it's posturing. These entities are MSBs. They have money transmitter licenses here. They have FinCEN obligations. They may not be regulated by a national securities entity like the SEC, but there are a host of different rules that they fall under and regulatory schemes they fall under. So I think that is just like a very old narrative that just, really needs to come into the 21st century.
Wow. I feel Josh wants to weigh in on this, though.
Yeah, but I know Josh has more to add to that.
I'm muted. I mean, I agree with David. I do agree with David. I do think, though, for certain types of tokens that are being contemplated, right? I think there is a question about, okay, well, what do we do? How do we list them, right? What changes, what pipes might need to be built out? Again, back with like the question that I've heard from certain asset managers, do we treat certain tokens as NMS securities, and what does that mean in the absence of legislation for what the platform should do? So yeah, I think, but I 100% agree with David that to say things are not subject to regulation already is not true. So
I do want to add that I am really going to take a dive over the weekend into Coinbase's token launching platform.
Yes.
And I did take a very quick look. I've been really busy this week at the disclosures for Monad, which is the first sort of token that's launching. And there are some interesting things on there about tokenomics, about market makers, about the amount of tokens that are being released to the public. So I think, it's things we've talked about. I think this is sort of the framing, at least on Coinbase's end, the framing of what they feel is necessary disclosure to list, new token projects.
David, I think the three of us have been collaborating and know each other for so long. We almost have the same to-do list on certain things. I have to dive into some of that as well, particularly because I've had some colleagues in the TradFi markets that have said something interesting about the token platform, and there are others that are doing this as well, but the response was, well, oh, look, the ICO boom is back. And there is there's a certain sense that that's not particularly a good thing. I think it's different this time around, per se, particularly given some of the evolution from a regulatory perspective. But David, Josh, have you heard similar? And I guess it comes down to, what is the use case there?
So I have definitely heard that ICOs are back, and we've been being, obviously I was a little distracted in the past week or so, but we have been being approached by a number of folks wanting to launch tokens, right? And I think one of the things that my colleagues and I really have been talking about is, okay, so we understand that the SEC may be unlikely to enforce in the absence of fraud or actual crimes. And when you think about how to structure something, particularly if someone is trying to capital raise, right, which again we still have the Howey test, and thinking about how to structure something like that, like, okay, so maybe the capital raise is a securities offering but the token is not, and then just trying to think through all these permutations and frankly what documents should be used now. Now, I think in a lot of instances, even just looking back at Commissioner Peirce's token safe harbor 2.0 has really informed a lot of projects, like existing projects that want to continue doing sales, right? And the disclosures and things like that. And I agree, looking at the way that some of these platforms have been envisioning things, I want to do that too this weekend. But yeah, I do think that there is a little bit of a gap here that we have to figure out, only because, and by a little bit of a gap, I mean, something.
Is it or is it not a security?
But when we have a situation where we know how the federal regulators, at least we think we know what their approach may be, but we don't actually have changes in laws, just like our friend Jason Gottlieb has brought up many times, we still have laws on the books that, the Ripple case, the Do Kwon Terraform Labs case, library, these sorts of things. And we still have private plaintiffs and we still have states. So trying to figure out exactly how to do this in a way while still making sure that clients and others are well aware of the risks. It's not as simple as we might hope.
Josh, good point. And yet another happy birthday to Josh as the audience weighs in. Adam, good to hear from you, buddy. Good to see you. David, Josh, really good points. David, I've got to go back to some macro stuff because I simply think that informs a lot of what's going to happen between now and the end of the year. And Josh, I'd love your perspectives on that as well. David, one of the things we look at often are underlying data points. Car delinquencies are up at all-time highs, particularly for those at the lower end of the credit worthiness scale. I think credit card debt is rising. We're seeing layoffs. And again, it's a weird economy to me because we've got some earnings, we've got underlying strength that has weakness on the edges. And I wonder, to the top, point we've all made a bit earlier, is that deflating the balloon a little bit. Add to that, we're not getting an interest rate cut. And I'm going to push back a little bit on that a little later on, David. I think I have a difference of opinion there with you. But how do we read a market like this?
Well,
how often does that happen, Josh?
One thing that does concern me is that we are seeing the lower end of the wage scale feeling pressures again. And I did hear anecdotally that I think Target is lowering its prices on a lot of products that it sells, like foods and goods for sort of the lower end of the market, or really everybody uses it, but targeted towards the lower end buyer. Look, those car loans got very expensive. I know a lot of people have to have a car, and they got very expensive. And I think people carrying 12-14% loans on inflated car prices, that's a big nut. So I do think we have some of those issues. I do think we've heard rumblings from the administration about wanting to address this, and I believe that they will. But I do think we do have another tale of two economies where, the lower end is getting hurt more. But we are seeing, layoffs across the board. I'm trying to think. There was another company, I think Amazon's doing a fairly sizable layoff, and Verizon announced a fairly sizable layoff. So I don't know if maybe this is the point where, if companies feel like they overhired the last couple of years, now's the time they're sort of right sizing. Are they seeing gains from AI? It's hard to say.
Yeah.
But I agree with you, though, Ron. I do think the lower end of the market is struggling right now.
David, this doesn't, I mean, have the prices come down? You collect bottles of 18-year single malt Macallan, as I recall, assuming the price hasn't come down on that.
I think there's some lobbying to get the tariffs reduced for. No, listen. All joking aside, I really do care when we hear people, who are struggling and having challenges, paying for their cars or not being able to pay their credit card bills. So I do hope that something can be done. I don't know how you feel about this potential $2,000 rebate to those who make under 100K. I'm not a fan of rebates like this in general, but part of me, wonders, will this help people, or is it just going to create more inflation?
I mean, look, I am never
Or both.
Or both.
Yeah, or both, right. I mean, look, I'm never particularly a fan of political stunts. That feels a little bit like a political stunt. That being said, people said likewise about the COVID relief checks that went out in 2021, but the three of us know that goosed up everyone's savings and or helped people pay down debt. So at the end of the day, I think it was used wisely for the most part by a lot of everyday people. So it'll be interesting to see where that goes. David, you and I and Josh, we all know that probably blows up the deficit a little bit more, but I don't think anyone even cares about that conversation. I know Elon Musk is talking about it. That's probably a happy hour conversation, David, for you and I over some drinks. But again, it'll be interesting to see where that goes. And I'm with you. Obviously, we see this kind of dichotomy, this growing, what are some economists calling it, this K-shaped recovery, where the top end is doing really, really well. The bottom end of the socioeconomic spectrum is not doing so well. So it'll be interesting to see where this goes. David, we've also have the holiday season coming up. Potentially we see more shopping, more consumer retail activity. Josh, David, does that change anything from the perspective of your outlook for the balance of the year?
I don't know. I have a feeling, Josh, in a normal environment, already getting a lot of sales emails from all those high fashion places that she shops at. But
oh yeah, the high fashion.
But all kidding aside,
she's a Birkin subscriber, David. She gets
exactly.
I mean, I have seen my daughter's list for this year, but anyway, all kidding aside, I feel like these stores, I don't know if Black Friday is as big of a thing anymore, because I think they're all rolling out sales like 2 weeks ahead of time and just trying to like elongate their sales cycle. But I don't know about you two, but I've gotten a flurry of emails like the last couple of days. When I was flying up to New York, I was, doing work and like trying to clean out some emails, and there were like 5 different stores that were having them. So I'm not sure. I mean, obviously sentiment matters. So if this is a slower holiday season, it's going to matter. But otherwise, I'm not sure.
David, I went to Home Depot not too long ago, early October, and the Christmas decorations were on the floor already. So it's a little weird. Josh, what about you? Birkin bag joking aside, I'm sorry.
Just in terms of the outlook for the rest of the year and what I'm thinking, I mean, I don't know, guys. Like, I think you guys know this about me. I'm not really much of a shopper anyway. And frankly, when it comes to the holidays, I'm sort of a last minute person. Are you guys surprised by that at all?
I'm with you. There's a nice gift certificate.
So yeah, I would say, like, in all honesty, like, my outlook for the rest of the year is not very focused on shopping, but it very seldom is. But again, like, what I do hear a lot, and some of this I just hear anecdotally on Facebook pages, like neighborhood pages, things like that. It does seem very much like what you guys are saying about the tale of two economies, right? I hear a lot of people lamenting, like, how can anyone ever afford a house ever?
Yeah.
Right. And that's obviously tough.
Which brings us to, we don't talk politics per se, but David, I love your perspective, and Josh, 50-year mortgages. I cringe at 30-year mortgages. Who in God's green earth would want a 50-year mortgage?
Maybe the question is there a way that we can, I don't know, maybe it's through a guarantor or something, but maybe, maybe the idea of putting 20% down to get loans needs to be revisited right now. Maybe,
Right.
maybe if somebody has demonstrated income above a certain level that could pay the monthly fee and rent or whatever it is, or sorry, maintenance or mortgage payments, maybe the idea of that for some bracket of housing needs to be rethought.
Yeah.
'Cause I think a lot of people can afford the carrying costs. It's just coming up with the down payment is a challenge.
Mm.
And maybe there's something that can be done there, but in a way that's not, creating a risk that people just kind of like give the keys back if they go through a little downturn, but some sort of flexibility around that.
Yeah.
Oh,
Go ahead, Josh. I'm sorry.
so just a question for you guys. I mean, what percentage of people do you think pay off their homes? Like if we're saying like, oh, a 50-year mortgage versus a 30-year mortgage, like what percentage of people actually pay off their homes and
Yeah.
then continue staying in them?
Yeah. Look, Josh, I'm with you. And I think I don't know. I would, if anyone in the audience knows, let
Yeah,
us
it's
know.
just
It's probably a
Right.
relatively low percentage, all things considered. I think the part of it that bothers me is when I think people look and don't realize that you're paying far more interest on a 50-year
100%.
mortgage than you are a 30, for example, which means you build equity in your home at a slower rate. Now, if the argument is target 20 to 30-year-olds, how many years do you want them to sit in one house as they have families, for example, not building equity in their homes? But I get the point, Josh. I mean, for a lot of people, the home is their quote unquote biggest investment. And by the way, David, I don't know if you agree with this. I've always hated that phrase. To me, a home is not an investment when you add in maintenance, when you add in taxes. But again, a bit of a different conversation. David, your thoughts?
No, I agree. I'm just thinking of maybe we need to get creative.
Yeah.
Maybe there needs to be something for first time buyers where you get like maybe you only have to put 10% down, but there's some other guarantee so that it's not creating a moral hazard. But I do understand and like very much empathize with people who want to own a home and are struggling to own a home right now. Like I totally get that. I don't get it to the extent that we've had this sort of radical change in Manhattan, but I get it enough that that it's important. And maybe there's a creative way to address this. And the 50-year mortgage was put on the table, but maybe there's other ways.
We just don't want to get back to zero doc loan.
No.
The
Well,
risk applies too much.
but also, I mean, I think a part of it, and of course, part of it's from COVID, but I know even just around where my house is, which is not a fancy area, it literally the housing prices have doubled. Like
Yep.
just for like a regular house that would have
Yep.
cost like $400,000, you're looking at $800,000
Mhm.
for the same house that would have been, immediately pre-COVID.
Yep.
So I just, when we think of that and wages haven't doubled,
No.
I guess it seems like part of the solution. I don't like, yes, maybe I take David's point and what we're talking about other ways to get people into the homes first, but just this divergence between growth and income and cost of housings.
Yeah. Josh,
Yeah.
it's a good point. And I didn't realize we're going down the real estate path. The three of us have a lot to talk about here. It is interesting because I had read something recently. David, Josh, how much of this is actually a supply problem? Like, is the answer, hey, builders, let's give builders some incentive to build more housing? I don't know how true that would be, but David, a studio apartment in someplace in Manhattan is $5,000 a month.
Yeah, we have a supply problem, but it'll take fundamental change to build more in a lot of places, and also the costs. Like, yes, people want to make a profit, and they're certainly entitled to, but I think the costs of building are really high as well. But I do want to pivot. Our audience loves crypto, so I do want to pivot a little bit. Since we're talking real estate, I will tell you that I am now working on to tokenizations of real estate, and
Really?
I'm really seeing a surge in interest in unlocking real estate, and tokenizing it so that people can buy tokens in it and get some ownership of it, and obviously on a smaller scale, sometimes on a corporate scale, but who knows, maybe tokenized apartments in the future are going to be the wave of the future.
I got to do a shout out to David Wysocki and Chris Broderson, who chair our tokenization working group. David, real estate tokenization has been a conversation we've all had for about a decade, give or take. You probably can't give us much more detail, but I'd love any detail you can give, because I'm certain we're going to get the emails for it later.
Well, all I can share is this: if you can envision a jurisdiction where foreign nationals can't own property, but if the real estate is tokenized, and as long as they work with a government entity, there's an ability through tokenization to allow foreign investors to have some ownership through tokens in these properties. So I think that's one interesting way. There are a couple of really unique ideas that I like. One in particular that I just can't speak to, but that was one example I can give you at a high level that's kind of caught some interest.
Josh, how much tokenization client work crosses your radar? I'm just curious. I don't think I ever asked you that.
It depends, right? I think there's some things where we've advised on, like sort of financial market infrastructure type work, where that is tokenization, and it's tokenization of real world assets, but where the real world assets are like treasuries, right? Or something like that, like where it's like, how real world is this? You know what I'm saying? But I mean, certainly I talk to people who are interested in doing tokenization, but in terms of what I've worked on, has it been like what David's talking about, like actually tokenizing real estate? No, I haven't. Yeah. But yeah, I mean, it's hard to sometimes know what I can share about what we're working on. But.
And won't push the point, Josh. David, I appreciate that. Josh, you cringed a little bit when I told David I disagree with him on something. So
no, I wanted to hear it. I was actually bring it back up to push on it.
Here we go. I'm going to do it. And we've only got a few minutes left. David, you said something that kind of stuck out for me. A 1/4 point interest rate cut in December doesn't really move the needle. I will disagree with you there. And the reason it moves the needle in my mind is it changes the forward curve of interest rate expectations. That hits options repricings, that hits credit repricings, particularly for the DATCOs that are going out there, either issuing debt or convertible debt or private credit to buy some of the tokens. So I get it in the abstract. It's just a 25 basis point cut. The everyday person says that, and I agree. But I think it has big implications for the credit curve going forward, and that impacts every industry.
Yeah, so Ron, I agree with you on that. I guess what I'm saying is in this moment, that 25 basis points isn't the difference between these DACOs selling or not.
Fair. Okay.
That's what I'm getting at. Yes, if we change gears and we're now going to be tightening again, of course, that's going to be very difficult. But I do agree the sentiment matters. Like we're seeing it in the both stocks and in crypto, and although I think in stocks we kind of like came off a little bit of a bottom here, but look, I think for better or for worse, that not knowing that the cut in December is coming, or now that it's in play, is absolutely not helpful, to the markets and how the markets are viewing things going forward.
David, and I tried to make that more controversial, Josh, than I should have. So apologies to both you.
No worries.
Go ahead.
Oh, I was just going to say, I can mention one thing that is related to tokenized assets. I was just Googling to see if it was public. One thing that I can mention that we've worked on, I've worked on along with, colleagues of mine from Singapore and London and other places, is we recently advised Global Layer 1, DL1, on the development and launch of the Market Infrastructure Toolkit to support global financial infrastructure for tokenized assets. So that kind of I definitely do work on stuff like that, but I have to be careful what I
Sure.
say. But again, nothing quite as real world as what David Brill has said he's working on. Mine is more still in the financial space. But I did want to mention, a bright spot, which I thought was kind of interesting. I had read about the Czech National Bank, which is a central bank creating a $1 million test portfolio of digital assets, including Bitcoin, a tokenized deposit, and a US dollar stablecoin. It's a
Interesting.
pilot program, and it's going to, I guess, work on purchasing, holding, and managing blockchain-based assets over the next 2 to 3 years. And this is reported on by CoinDesk in an article by Francisco Rodriguez called Czech Central Bank Becomes First Central Bank to Buy Bitcoin. So, even as we're in a, perhaps not the sunniest spot for prices, more is happening.
I mean, and that's a good point, Josh, because it reminds us this is also an international conversation. I mean, a lot of our members in our audience are US based, but we have conversations regularly with colleagues in Dubai, in the EU, in the UK, and there's a lot of that kind of progress still happening. David, Josh, I wanted to end with one last thing, which really is now totally escaping my brain. Anything else you guys want to cover before? And I do have a couple of quick announcements for us as well, but we're running out of time. David, Josh, what's your week coming up look like?
Well, let Josh go first.
So I'll be catching up on a lot of stuff. I haven't even looked at the calendar to see if I'm going anywhere. I don't think that I am, but yeah, I just have a lot of stuff that I have pushed, and I thank everyone who may have let me push things to. I thank them. I know next Tuesday I have I'm going to be doing recording a TRM talk.
Ooh.
So I'm excited for that. But yeah, I think in general, just gonna catch up on everything I was distracted from. What about you guys?
David, I think you did a drive-by fly into New York City. When are you heading back out?
Literally, I'm headed to the airport right after we're done. So I am staying in Florida through Thanksgiving. That is what I'm putting out to the world, so that I can stay in Florida through Thanksgiving, because I really don't like to travel Thanksgiving week. I have a lot of reading to do besides work. I think I really want to dig into the disclosures from the Monad token launch, and really want to think about that. And I really want to get into the Ag Committee's recent draft and see where the brackets are. I think that's the key right now is what's been said and where the brackets are. And then I think, I'm going to be watching the markets closely. I mean, if we stay below 100 for any meaningful period of time, that is definitely going to affect sentiment. And I have a feeling people will be calling me this weekend, not them giving investment advice, but
hey, I'll be calling David.
They'll be like, what do we do? Is this a good time to jump in? What are you seeing? And so again, no investment advice, but it is something, definitely paying attention to. And if ETH were to break 3,000, I think, or 3,100, I would have the same feeling. I guess the last thing I'd say and is that a lot of tokens are trading at sort of inflection points where if they were to go below, really want to be paying attention to that.
David, interesting point. I'll be taking out the red pen and reviewing the Ag draft as well. And for anyone in the audience who's wondering, half of those text messages to David and Josh will be coming from me. Two things, real quick announcements for everyone in the audience. Again, thank you all for joining us. If we missed any questions you had, info@WSBA.co. Our next webinar is coming out on December 2nd. Time is short. You'll see the announcements for this soon. Our accounting experts will be talking about the recent IRS updates on 1099 DA and the broker reporting regs. For everyone who's in crypto, you are probably getting 1099 DAs, and it'll be on your plate to make sure they're right. December 4th, Josh, David, is the WSBA annual member holiday party. Shout out to David Adlerstein and our friends at Wachtel for hosting it. I am hoping David's Gulfstream is available to get him back up here for the party as well. And I'm going to end off for everyone with a book recommendation I read recently and was recommended to me from Gary Boomer at Boomer Consulting, who's a great guy and a member. I don't remember the author's name. The book is The Last Economy. It's a little bit of a brain dump from a really smart person about AI. And if you think you know what the future with AI is, this book took apart my brain and put it back together. It's worth the read. David, Josh, I'm going to leave it there. Thank you, everyone, for joining us. Have a great week.